This is an update in technical analysis on C3 AI Incorporated, a company of the technology sector and information technology services here off the daily interval. And I had mentioned on the 1st of April 2023, we're trading spot price $33.57, gearing up toward this key 34.27 price resistance, whereas we had a primary hidden downtrend line. Really love the colossal inflection point coinciding with that primary resistance, multiple and continuous reactionary lows, reactionary highs, really validated strength and resistance. Whereas it'd be time to start scaling in amongst this key 34.27 price resistance, scale up on top, coinciding with the 618 fibbs retracement at 37.26, right amongst that key inflection point, coinciding with that primary, call it dual line of resistance, scaling a little at 34.27 and a little bit north above the 618 fibbs retracement. And if we were to get that reaction, that's when we would have confirmed negative and bearish divergences amongst all four indicators, heavily increasing the odds for a big move to the downside. And here is the update. The entire trade thus far, zoom in here, it's good for a 40.32% crash. And I had previously stated how imperative it was at the key triple quad strength of support here off this primary uptrend line. It was an inflection point bull and or long traders had to defend under all circumstances, and snap, went right through it. Bear traders, short sellers were attuned to this critical turning point and exploited a major sell signal once cracking this key inflection point, taking advantage of a pronounced C3 AI stock downturn. Short sellers could smell the blood in the water and wasted no time in exploiting it here. And it was amazing where we ended up backtesting that primary uptrend line there, where we opened up, completely backtested it right to the button here, offering an additional reactionary short trade setup on a key day trade, smashed right through that key inflection resistance and to the button, to the T. I could not stress how imperative it was that long traders, bull traders defend this key 236 fibbs retracement, coinciding with that 2053 price resistance. And again, to the button here is the name of the theme on this channel, where dip buyers, bull traders stepped in right to the button, especially if you're day trading on that open. On a buyback, on a pullback, that was good for 16.6% gains in one day there. Huge inflection point, almost hitting up towards that 2438 price resistance. Darn near rejection, but I can tell you we did get rejected right amongst that 50-day moving average there, and that's where we ended up coming and closed right down below there. So anything's possible. We ended up could end up opening up on a much larger, bigger candle to the upside on Tuesday or Monday, and that would also be an additional objective short trade entry for a move to the downside if reflected upon there. So if we get that sort of a move like that, maybe even a consolidation period. But that's the key level right there. It's 2050 price support off this. Almost looks like gives me that head and shoulder looking fill, where we put in that evening bearish doji continuation star, a beautiful just a key inflection point, which was taken over there. So we'll see what happens. We do have a confirmed crossover on the moving average convergence with huge steep negative bearish divergences amongst all three indicators. Call it as you will. That is a sell signal on the daily. That's as good as a sell signal as you can possibly get there. And again, a potential counter trend rally back test of that primary at the bottom of that primary trend line would offer an additional objective entry short for the moves, any moves to the downside. As far as bull traders, long traders, they want to definitely defend this key functioning price support, 236 fibbs retracement at all cost here. They want to retake and recover this 2438 price resistance, maybe even a move up to the upside off that 382 fibbs retracement. There is nothing more bullish in trading than a false breakdown sell signal. So if this turns out to be a major bear trap, a false chain breakdown to challenge those negative and bearish divergences that were in place, to go and burn them off and challenge that 618 fibbs retracement, finally coinciding with that primary hidden trend line, you want to dollar cost average amongst every support level that I'm giving you in order to average down that position size for the big major move to the upside if you believe in the company.